2 years ago, my guest made the most accurate forecast for how Bitcoin would close off 2020 amongst all the popular Bitcoin pundits and advocates in the world. Max Keiser had forecasted $20,000 Bitcoin by the end of 2020. So, how is he expecting Bitcoin to close off in 2021? He has chosen this platform to give his most coveted and highly anticipated Bitcoin forecast for the year. This is the show to watch if you care about Bitcoin. Welcome back. Happy New Year, Max Keiser.
Oh, Daniela, it's always a pleasure to see you, and Happy New Year to you and your viewers. And I see your show is growing in popularity exponentially, almost as fast as Bitcoin.
Big time, yes. And like I said, I'm very happy that you've come around and have decided to give me your Bitcoin forecast, and we will get to it in a bit. But first, I've prepared something special for you, Max, because this is not an ordinary show. This is a very special show. And I've created a game for you called Seen and Overheard on the Street about Bitcoin. Common things we often hear about Bitcoin. I want to get your take on it.
Yeah, all well, right? Before we begin, I'm going to make a statement.
Go ahead.
This is salt. Okay. Now, what does that have to do with Bitcoin? And I'll tell you what it has to do with Bitcoin. The British Empire was defeated by Indians under Mahatma Gandhi because they made their own salt. And back in 2009, the beginning of Bitcoin, it was the cypherpunks and everybody who was objecting to central bank authoritarianism who got together and said, we're going to make our own money. We're going to make our own money. It's called Bitcoin, and it's passive resistance, and it's going to topple the central bank empire, the central banks around the world. I predict, one of my predictions will be one of the major central banks in the world will collapse in 2021. They're highly leveraged. As your guest, Jim Rickards, points out many times, these banks are leveraged 50, 60, 70 to 1. They're leveraged more than long-term capital management was when long-term capital management was at its highest point of leverage. So Rickards would know about this stuff. And one of them is going to collapse in 2021, and that will start an avalanche out of fiat money and paper money, and the top beneficiary of that will be Bitcoin. That's one of the catalysts for a price appreciation in 2021. But my point is this, Daniela, Bitcoin is a protest against fiat money, central banks, authoritarianism. And the way the protest works is the cypherpunks and everyone involved in Bitcoin, essentially, we made our own money. It's perfect money. It has nothing to do with the state. You've separated for the first time in history state from money. It's never been done before, ever. And now it has been finished. It has been completed. It has been figured out, and it's been launched, and it's out there for 10, 11 years, and it's working. And the nation state, as we know it, is going to dissolve. Central banks are going to dissolve, and fiat money is going to go the way of all fiat money has gone over 300 years. Not a single fiat money, paper money scheme has lasted over the past 300 years. They've all gone to zero or lost 99% of their purchase power. So it should be no shock to anyone that the US dollar is going to go to zero. The British pound looks particularly horrible. That's definitely going to go to zero. All the fiat money is going to go to zero. And of course, the chief beneficiary of that would be Bitcoin. And these are the catalysts. These are the catalysts to see this price projection, and why, when we get into the numbers, you'll understand more why I have the number that I have.
Yeah, and I agree with you that I think a big portion of it is a protest against fiat currency. But on the other side of the equation, a lot of it is people who are looking at this price of Bitcoin just skyrocketing, thinking, I need to jump on this.
Right. Well, it's a magical kind of metamorphosis that turns greed into altruism. Bitcoin attracts a lot of greedy people who want to make money trading on Bitcoin, but as they're defunding central banks, and they're defunding fiat money, and they're defunding the nation state. So it's a very interesting technology that turns greed into the hardest money ever known in the human history. So the greedy folks, we need the greedy folks. We need people come for the greed, they stay for the revolution.
I think that people's concern, and we'll get to it in my game that I'm excited to play, Seen and Overheard about Bitcoin, is that, it's and you've heard this before, I'm not saying it. This is the ultimate bubble when your 12-year-old nephew, this happened to me this weekend, came over and asked me, Auntie, how do I buy Bitcoin?
Well, the biggest bubble in the world by far is the bond bubble. So it's in a it took 300 years for the bonds in the UK to get this extended and into a bubble. It took over 240 years for the American debt market to get into this bubble. It's so far in a bubble that's gone negative. Interest rates in the sovereign bond market are now actually negative. So that not even Bernie Madoff, got his Ponzi scheme to that level of extremity. So that is by far the biggest bubble in the world, is the U.S. bond market and the sovereign debt market. Then you have behind that, I would say, the fiat money currency. The U.S. dollar is in an enormous bubble. You've got still some property markets are in a huge bubble. And probably the one asset in the world now that's undervalued, that's not even very close to getting into a valuation that it should be commensurate with the rest of the markets, would be Bitcoin. Bitcoin is the cheapest asset in the world you can buy. As Paul Tudor Jones has said, it's the fastest horse in the race. Paul Tudor Jones doesn't have to say much to make a huge statement. He said that the Bitcoin price is mispriced. He said the Bitcoin price is, whenever he sees something as mispriced as Bitcoin, he gets excited to see that. And what he means by that is what I've just said, essentially, is that everything else pretty much is in a bubble. Bitcoin is one of the only assets probably that's not a bubble. It's the most undervalued asset probably in the world today.
Yeah, and I think that's such a mind shift and a hard concept for many to grasp, what you're saying right there, Max.
Right. Well, as I said, the central banks are in a bubble. I mean, if you have a 50, 60, 70 time leverage is an enormous bubble. You've got stocks trading at 1,000 times earnings, 1,500 times earnings. Tesla stock trading at over 1,000 times earnings. I mean, by any standard measure of valuation, that would be bubble territory.
All right.
You've got a lot of bubbles in asset prices that have been fueled by central bank printing. Here's the a chart of M2 money supply growth, which is growing at 20% a year. Bitcoin price is staying ahead of that M2 growth. It's the only asset so you got true price discovery that's reflecting true money printing. Gold is not, doesn't have good price discovery in gold because it's been almost 100% financialized. That's why gold is lagging as badly as it is, and it's not a good store of value in this type of money printing. This is also why corporations like MicroStrategy under Michael Saylor has said, look, the real inflation rate is 20% a year. It's not 1.5% a year. It's not 2% a year. That's a government published number that doesn't take into consideration the massive asset valuations that are popping, that are in bubble territory. That is very convenient for those who are doing the printing. Is it coincidence that the people who do the printing of the money are the ones that are benefiting the most from the printing of the money? No, that's by design. It's incredibly corrupt. But the real number is 20%. And Bitcoin is true price discovery that's outside of the control of central banks and government, because you've separated government from perfect money. So you have real price discovery. And Bitcoin is telling us that this 20% money supply growth per year is resulting in a hyperinflationary collapse of the US dollar against Bitcoin. And the markets, that's what the markets are telling us. I'm a free marketeer. I look at markets. When markets tell me stuff, they send signals. I read those signals and I invest accordingly. And that's what the market's telling us, that price discovery in Bitcoin is accurate and true. Price discovery in these other assets is completely manipulated, and it's demonstrably manipulated. JP Morgan just paid huge fines for manipulating the gold price. That used to be a conspiracy theory.
And then they made all their money back. The same amount they paid in fines they made back this year.
Right, JP Morgan, they paid $1 billion in fines for manipulating gold, and they paid the fine by, you guessed it, manipulating gold.
So we're going to talk about gold a little later, and you mentioned a good point there. But I want to get into the nitty gritty of Bitcoin here. And the point of the game is really to bring up, things we commonly hear about Bitcoin. So with more and more interest now on Bitcoin, you saw it making the front page of the Financial Times. Everyone wants to know about Bitcoin. I want you to dispel or poo-poo or agree with things we commonly hear about Bitcoin. So here we go. Seen and overheard on the street at Katz's Deli. Bitcoin is the world's first distributed, decentralized Ponzi scheme, Max Keiser?
It's demonstrably, provably not a Ponzi scheme. As a matter of fact, it's a reverse Ponzi. In a Ponzi scheme, the base of the Ponzi scheme has to constantly get wider and bigger. The new money has to keep coming in to pay the investors off who have gotten into the Ponzi scheme early. That's a Ponzi scheme, as Charles Ponzi created the Ponzi scheme with his scheme of, I believe it was stamps, and they had a stamp collecting Ponzi scheme, and that's where we get the term from. And we now also look at Bernie Madoff was running a bit of a Ponzi scheme in that he was paying off investor returns with the new money coming in. Now let's look at Bitcoin. Bitcoin is actually the opposite. Every 4 years, the amount of money that's mined on a daily basis shrinks by 50% in what's called the halving. So we started off with 50 coins per distribution on the mining output per 10 minutes. And then we had a halving down to 25, and then a halving down to 12.5, and a halving down to 6.25. So actually, it's a reverse Ponzi scheme. The amount of money that's entering the system is shrinking, not expanding. So that's a very simple point. And anyone who calls it a Ponzi scheme, A, doesn't know what a Ponzi scheme is, and B, has never looked at Bitcoin for more than 5 seconds, or just accepted like a Nouriel Roubini tweet as if that has a meaning, but he's never looked at it either. So that's demonstrably, provably wrong.
Okay.
So, I mean, it's just, if you look at a definition of a Ponzi scheme and you look at the distribution of coins within Bitcoin, it's so simple that any 9-year-old would look at this for 5 minutes and tell you exactly the same thing. But again, we have a mainstream media that doesn't qualify to have the intelligence of a 9-year-old. They simply repeat propaganda points because they're propagandists.
Oh, seen and overheard on the street. The only thing Bitcoin has going for it is a rising price. Without it, it would tank.
Well, that's again, not true. So what Bitcoin has for it is that it's a savings technology, the best savings technology ever invented, the best hard money that's ever been invented. And humans have a real need for hard money to do trade. Humans like to trade and they want hard money. That's what, over the thousands of years, gold kind of evolved to be a great way to trade in something that had a store of value, so that I accepted your gold today for goods and services. I could respend that gold in the future. And you couldn't do that so well with beads and shells or, different things that have been tried for money for many years. And gold was doing a pretty good job for a long time. Then Bitcoin came around and it's doing a better job than gold because it's scarcer than gold. So it's harder than gold. It's absolute scarcity of 21 million coins. Gold is inflating at, let's say, 2% a year. And we know that if the price of gold goes up, the technology to find more gold will also increase. So that number could go 3, 4, 5, 6% a year, just like we saw in the energy markets. It's not, the gold supply is elastic. It's not inelastic. It's not finite. It's elastic. So that's a problem. Number two, it's unlike gold, it's unconfiscatable. When I was saying Bitcoin, you cannot confiscate Bitcoin. You cannot censor Bitcoin. It's portable, more portable than gold. It's more divisible than gold. So it's on every single key point that you like gold, Bitcoin does a better job. It's hard money and it's a store of value. That's its primary purpose. That's its number one goal. Why is it going up in price? Is because we live in a world of hundreds of trillions and quadrillion of fiat money that is destroying people's lives, destroying economies, creating wealth and income gaps that are creating social unrest. And it feeds malfeasance. Every time the U.S. government makes a stupid mistake, they paper it over by printing more money. Same thing with all these other G20 countries. Since 1971, since we went off the gold standard. If you make a mistake, you make a blunder with your policy, just paper it over with more printed money. By the way, does that create more cantillionaires at the top who then control more of government and the corruption goes wider and the people at the bottom are getting poorer and the purchasing power is weakening? Yes, it does. But tell that to the people who are printing the money and putting it into their pocket. They don't care.
This game is getting you fired up. When new buyers stop coming in, then Tether buys and manipulates the price higher.
Tether is 7% or less of the market. It was big in 2017. That was a talking point from 2017. It was resurrected recently. I think Rubini likes to keep talking tether, tether, tether again, and expects everyone to think that his farts smell really good. But guess what, Nuriel? Your farts stink and your logic is broken, and you haven't even spent 3 minutes studying this and how NYU keeps you employed. As an NYU alumnus, I've sent a few letters to them saying he needs to be fired, gotten rid of immediately. He's a plague at NYU. He's embarrassing alumnus like myself at NYU with his utter contempt for civility and, well, maybe not civility, but he should be gotten rid of. I don't care if he's got tenure. So Tether is not a factor. Tether is not in play. It was brought about in 2017 as a way to trade in and out of Bitcoin into a US dollar surrogate. It's basically a money market. You know, money markets have a use. People trade in and out of a money market. If I have an account and full of stocks and I sell my stock and I go into a money market until I find a new stock. Same thing with a Tether or a stable coin or a US dollar type cryptocurrency. It's like a money market. And like in the money markets in 2008, remember, there was a threat that it would break the buck because money markets are not exactly 100% a guaranteed piece of paper. Yeah, there's counterparty risk with basic money market account. Hello, if this is news to you, wake up. Your money market has counterparty risk. So does Tether, so does every security in the world, so does every exchange in the world. The only thing without counterparty risk is Bitcoin. Bitcoin has no counterparty risk. That's something else gold doesn't have. Gold has counterparty risk. Gold has verification risk. Gold is expensive. It costs 7% a year to store it, to verify it, to transport it. Gold is expensive on all counts.
I'm kind of surprised. And like I said, we'll get to gold in a bit, but this anger towards gold, because you own gold, you own silver. And last time we spoke, you liked gold.
I'm not angry. I'm not angry. I'm simply getting into the groove, baby. You wouldn't say James Brown is angry. He's funky, right? He gets it on the one, and he's going down that path, right? I'm funky, baby. I'm not angry.
Let's keep.
So let's get on the path. So gold is, yes, I own gold. I own silver. And I've owned them for a long time. I started buying gold at $400 an ounce. I started buying silver at $500 an ounce. And I've got a lot of silver. I'll wager you that I've got more gold and silver bullion than Peter Schiff has personally.
Why wouldn't you sell it? Would you sell it and just go all in Bitcoin?
Well, a lot of it is actually hard to get to. It's hard to move it. It's sitting in a warehouse, and it's actually difficult to sell gold and silver. This is why it's not great. I've tried to sell it and move it and do a lot of stuff to it, but it's actually not that easy to do.
Why? Do you have it outside the US?
Without going into particulars, Daniela, it's not easy to move, transport, etc. And I have sold some, but it's not an easy asset class to deal with.
Okay. I can get two more in here. I like this one because I'm a culprit of it being part of the media. Okay, Bitcoin, it can melt down, but you can't melt it down. Bitcoins are not shiny, golden, and metallic as media has you believe. Bitcoins are just 32-byte numbers, nothing more than that. And when the market crashes, you can't melt them down or use them as jewelry or for electrical circuits.
Well, you said like two or three different things there. But I'll try to unpack it as best I can.
It was a long sentence I overheard. But I think the point is it wrong to depict Bitcoin, and like I said, I'm a culprit of it, as this shiny gold object that we show in our B-roll when it's just 32-byte numbers that you can't really do anything with?
No, you should, in your B-roll, you should show Bitcoin as what's called a coin kite, a digital device that holds Bitcoin. It's a company up in Canada, and it's a way to... it's the equivalent of a shiny gold ounce, but it's just the media lazily likes to put up gold coins to depict Bitcoin, and so that's their problem, not my problem.
Okay, let's end with this one. Overheard on 72nd Street, New York City. Max Keiser is either Satoshi Nakamoto or Kaiser Soze. I heard it.
I'm Satoshi Kaiser Nakamoto Soze.
All right.
No, I'm not Satoshi Nakamoto. And the cypherpunk 20-year history that preceded Bitcoin is well documented. There are 4 or 5 attempts to create a Bitcoin that goes back 20 years. Adam Back, for example, is involved in one of these e-cash types of, or e-gold. And even back in 1995, 96, I created the virtual specialist technology. So I actually have a patent on the first digital currency in the world. And that patent was sold to Cantor Fitzgerald on Wall Street. And they use it and they make hundreds of billions of dollars in revenue on that patent. And so I'm quite familiar with this whole history and this technology and the software. But I'm not the guy who wrote the white paper in 2008. And Kaiser Soze is more, I would say, to my liking as an archetype for Max Kaiser, because Kaiser Soze was the thing you never saw coming, but just obliterated everything in its path.
Okay, on that note, Bitcoin is for the people, by the people. You and Stacy are now the king and queen of the Bitcoin universe. And you guys deserve that success. So continue.
Join us.
Come to the Bitcoin side.
Come to the Citadel.
Thank you so much, Max Kaiser. Give my love to Stacy. Thank you so much. This is Must Watch TV, guys. Thank you, Max Kaiser.
Until next time.